Welcome to the Building Web3 podcast. Today, we're exploring the $468 billion venture capital market and the creation of new L1 blockchains. Plus, we'll go into decentralized AI and storage solutions with our friend Anthony, partner at Innovating Capital and co-founder of Pastel. You're going to want to stick around for some insightful discussions on the future of Web3 infrastructure and decentralized AI. Remember, nothing stated here is financial advice. Welcome to the Building Web3 podcast. Today I have my good friend Anthony here. He's the general partner at Innovating Capital and the co-founder of Pastel. Anthony, before we get too deep into Innovating Capital or Pastel, let's talk a little bit about what were you doing before you got to Web3 and what was your come to crypto moment?
Yeah, totally. Thanks for having me on first and foremost. Glad to be here. So quick background on myself. I actually got into the landscape of crypto from the lens of a developer. I was doing some open source contributing for an early EthereumDApp called the Golem Network, GNT. This is back in the day. And honestly, my come to moment, really kind of come to Jesus moment of sorts in terms of crypto was really just understanding I think I was listening to an Andreessen Horowitz podcast way back when. And they were talking about the future of Web3 and what it could really transform. And it's much more than kind of commodities or currencies or digital assets, but really the new wave of the internet. And if you think about general markets, take the commodities market, for example, the multi-trillion-dollar market, when you involve Web3 and new types of distributed technologies that are entirely permissionless and then totally accessible to constituents across the world, can't necessarily just say that this market's going to take certain market share from the existing Web2 market, but it's actually creating an entirely new economy where for the first time, back to my commodities use case, you could have new market participants that would never be able to buy swaps or derivatives or whatever it might be for agricultural, crops or whatever. Now they can for the first time using smart contracts and DeFi and things like that. So really just starting to think through and envisioning the unlimited use cases that crypto can really, I know that sounds cliche, but the unlimited use cases that Web3 could really capture and cultivate and really kind of open up doors to entirely new markets and really democratize so many assets in the world.
Okay, so we got to, you were working on, some early dApps in the Ethereum space. And then what got you to Innovating Capital and Pastel?
Yeah, so listen, I loved working on dApps and I loved technology and technology investing. Spent some time in the venture team at First Round Capital, wanted to kind of go back into the world of venture capital. And really, I love the venture space because you get to really explore so many different emergent trends. It's great to be an operator and it's great to build. And I love that side of it. But it's also amazing to invest because you get to really look at and explore and you're constantly going after and really stimulating everything with respect to certain emergent new trends in markets. So I started Innovating Capital really because I wanted to invest in crypto and Web3, and there weren't many other funds, if any, back then that were doing it. And part of it was also to really be kind of a first to find type fund that took more of a hands-on approach. So being really active with respect to the networks and ecosystems that we're involved in. Injective Protocol is a good example. We've been early investors in them for a while. We run a validator for them. We were one of their first decentralized market makers. When they first launched their DEX, there were very few decentralized market makers in the ecosystem. So we took time to really actually spin up those operations and help get the Helix app off the floor. So really a lot of what we do is take early stakes and very much so hands-on approaches to help capture and really develop and grow these networks over time.
And for people that are unfamiliar with Injective and what you guys are doing there, could you talk a little bit about what that company is? And, when we have interviewed venture capital people in the past, it wasn't that hands-on. It was more like give them money, give them some guidance. You guys are talking about like running validators and doing some more, even launching a DEX. Can you talk a little bit about like one, what Injective is, and two, like why you guys go to those lengths and aren't just like a capital provider?
Yeah, for sure. I mean, listen, when we make these kind of investments, we're hyper focused on finding founders that, from our perspective, have really identified a very specific problem set in the market. In the case of Injective, they've built an extremely fast L1 that's application specific for financial primitives. So there's obviously a lot of general purpose L1s out there that are super fast. You know, Solana, certain IBC chains, obviously, even Ethereum with certain L2s nowadays. But Injective really, from our perspective, identified a very unique pain point in the DeFi ecosystem and was able to come up with, from our perspective, a technologically sound and really, supreme way to tackle that problem. Very impressed by the team, love the team there. And back to your question, why are we so hands-on and so active? Because when we're making these investments or these bets, we have such conviction that we are excited to become more and more engaged and to really double down, not necessarily just in a monetary perspective, but from a resource perspective, development resources, computational resources, whatever it might be. And that's part of what we love and why we love doing it.
Absolutely. And I feel like VCs often get sometimes a bad rep in the industry where they're like, oh, they just get early tokens and they end up just dumping on retail. Can you talk a little bit about like how your guys' approach differs as it's way more hands-on, and like how many investments are you guys even making a year if it's such hands-on and like such high touch investments?
Yeah, no, it's a good question. I mean, listen, when we were first getting started, we definitely made, I would say, more investments. I'd say that, let me put it this way. 80% of my operational focus is probably around, 20% of the total number of portfolio companies we have. So we've really shifted the strategy from before we would make maybe one to two, one investment a month. Now we're making effectively one investment a quarter, if that. And we're hyper focused on really deploying capital and time and resources to the existing portfolio companies that we've worked with for time. In terms of the first part of your question, we're truly venture capitalists in terms of both our risk appetite, but as well as our duration. So we're not necessarily looking to, grab tokens, and we don't necessarily need short-term liquidity, nor do we even necessarily want that. And some of our investors don't. Our LPs that give us capital, they don't want to see returns for 7, 8, 9, 10 years, right? There's obviously tax implications and different tax planning and estate planning that goes into that. So from our perspective, when we're investing in these early protocols, yes, there's obviously some risk management that goes into it, but more times than not, it's very much so kind of a binary outlook where we're holding on to these businesses and these investments for almost a decade.
Yeah, I think that's a much better approach. Coming from the traditional tech sector, it's kind of wild that you would have a liquidity event so early in a company's history, and then how do you keep like an engineer on board if they've 10x their token portfolio in 6 months of working there?
Exactly. And it's so funny you say that, because that was one of the biggest problems I had with digital asset investing, especially really in kind of like the 2017, 2018 ICO boom. There was such a misalignment of incentives, right? In a traditional venture capital investment, obviously seed through Series D and pre-IPO and then on, right? You have a very, very kind of clear-cut roadmap and milestone, and you're growing almost in a ladder in a very, it's like a staircase, right? A stepwise function where you're growing and hitting milestones on a very healthy basis. And you have stock that's vesting over time, and you have option refreshes that come at these key milestones and things like that. And you know exactly what you're working for. And you know exactly if you hit those milestones, you'll get to the end objective. With crypto, it was always very counterintuitive, where you have a white paper and a grandiose vision. It's just, you sell an idea and you raise tens or hundreds of millions of dollars. Some of those projects like EOS back in the day, right? What happened to that? And you have this massive vision. You raise a ton of money, and then all of a sudden, my tokens are fully vested. I have a ton of cash in the bank. All right, what's my incentive to really grind it out, to really work that extra 18, 19, 20 hours a day, 7 days a week to get things done? And that's a mentality you need to find, right? The Injective guys, they're hustlers, they grind, right? That's something that, even though the project's now, worth a couple $1 million from a, coin market cap perspective, they don't care about that. They don't look at that. They know that's not what they're going after. They're going after a company, a technology, a protocol. It's going to disrupt the entire world of financial primitives. And, they're just getting started. And so finding that mentality in founders is a huge part of the investment thesis. And it's an intangible trait that's obviously, you can't quantify it, but it's something that, comes with time, being able to identify.
Yeah, absolutely. And well, how would you say you can identify? I've definitely seen it a few times, not to pick favorites between my podcast guests, but my friend at Native, Mina, she was like, I'm always available, and she truly is always available. I'm unsure if she sleeps. And then our friends at Pendle, the bear market, and they talk about how their token practically went to like near zero, and how they just had to like keep the energy alive in the space. So how do you go about finding these kinds of these teams that are focused on a bigger vision than just like the asset token appreciation?
Definitely. Definitely. Well, I mean, a huge part of our investment philosophy, and obviously coming from kind of more of a technical background myself, is we spend a lot of time building out a particular thesis on what the future of particular sectors or verticals is going to look like. So for example, Injective, right? A huge part of that thesis had to do with the need for app chains that were focused around financial primitives. And it tied into a specific type of cryptographic scheme that we were really bullish on, VDFs, verifiable delay functions, something that Solana uses as well. And it's kind of core to the L1. And then we really go out into the market and we look for managers, operators, and founders who are building solutions that really fit that thesis. And so we almost kind of back in. It's a little opposite than we're just sitting around waiting for pitch decks to come to us, and then we're identifying teams and we're looking through it. Everything we do is very outbound oriented in terms of our sourcing methodology. But then from there, right, there are certain characteristics and traits and qualities that are part of just the overall diligence process. How founders are receptive to certain suggestions, how they can really troubleshoot certain problems that come along. Are they really willing to grind and stick it out? And obviously structuring some of the token economics in certain ways that aligns them with the long-term success and not necessarily, short-term fruition. And even kind of gauging their pushback or, how receptive they are to some of these suggestions tells us a lot of what we need to know about them.
Mm-hmm.
If we talk to a founder and we tell them we're going to put them on a multi-year lockup period or vesting schedule, or we're going to restructure their token grant, and they have a ton of pushback on that, it obviously somewhat of a concern, if that makes sense.
Now, do you guys have standard, we'll call these, like you talk about the token grants, the lockup periods that you kind of recommend for most of your companies, or it largely varies?
It largely varies, right? If it's a traditional venture business, and it really much so varies on the type of security. Is it traditional equity that is largely liquid? And is the company, at what stage is it? Is it early stage? Is it pre-IPO? Or is it a liquid token that is going to be listed on Binance next month, right? So all these are factors that go into it. We have vesting periods that could last anywhere from 2 years to 10 years. It totally depends. Obviously, the standard a lot of times is typically 4 years, with kind of constant refreshes and things like that. But it's all really dependent on the state of the security and obviously the market and liquidity of the instrument itself.
So earlier we talked about the ICO boom in, we'll say, 2017. Can you talk about how venture capital has changed in the crypto ecosystem from that time to today?
Mm-hmm. It's funny. It really does seem to. What's the old saying? History doesn't repeat itself, but it rhymes.
Mm-hmm.
And that's certainly something I've seen. The boom in crypto during the ICO craze, in terms of venture capital funding and financing, and then really disappeared. And then DeFi summer comes, and then obviously we saw kind of the 2020 boom, and then venture capital is back as much as it can be. And then obviously we saw what happened with FTX, and then all of a sudden there's an AI craze, and AI times crypto, and VC's back. So it's funny to see if you look at just kind of the quantum of deals as well as the venture capital funding that's injected into the space, it would look as if it's really just kind of following this chase the herd, chase the hype mentality, right? Of kind of boom, bust, boom, bust. if you go a little deeper, you'll really start to kind of see and understand the important nuances with respect to this kind of resurgence of funding, because it's become a lot more disciplined, a lot more patient, and obviously a lot more judicious with respect to how venture capital has kind of entered and exited and re-entered the space over the last several cycles. And I'd say first and foremost, during the ICO craze, it was very, very founder friendly, founder driven with respect to terms. And there was obviously a significant amount of FOMO. And there wasn't necessarily a foundational landscape of what the future of crypto was going to look like with regards to the just broader infrastructure, right? Are we thinking about fatty protocols and thin dApps? Are they fat dApps and thin protocols, right? And understanding kind of where value is going to accrue and then across what ecosystems. And so I would say that money was thrown really all over the place. And there was a lot of money that was thrown on dApps, on L1s that just don't exist anymore. Obviously, over the last kind of couple cycles, things have become a lot more focused with regards to where capital has been captured. And I think those are really key critical points of the ecosystems. And I'm not talking about NFT marketplaces or user-facing applications, because I still think that we're ways far out from that, right? We need to really get to a point where we have reliable, usable L1 infrastructure that can be easily bridged across different ecosystems, where you can just not only necessarily just bridge assets, but also bridge data and user information. And then from there, you can start to layer on the user-facing applications on top, which is what will get people more excited about the ecosystem. So I'd say, to kind of answer your question in short, the early venture funding was almost backwards. Let's invest in a bunch of the applications and we'll invest in some of the big protocols. Whereas now it's kind of, let's take a step back from the apps and let's focus on building out the core underlying L1 and interoperable tools that we need to really bring this vision of Web3 to the present now.
So would you say your fund is essentially focused on infrastructure bridging, maybe some like AI, decentralized AI applications? Or how would you categorize maybe the verticals in which you guys invest?
Yeah, everything we do is very much so infrastructure focused. L1s, L2 investing, obviously certain off-chain infrastructure, scaling solutions, and things like that. Very rarely, never really do we invest in dApps, NFT marketplaces, decentralized exchanges, things like that. And not that I have an issue with that. Obviously, those are important with regards to capturing a lot of the consumer-oriented and really developing the proof of concepts in the market. Obviously, Injective, for example, has its own decentralized exchange called Helix that's built directly on top of Injective. And that's been a huge critical point for the market to really understand why Injective is so important, why it's so critical. When a user can actually, feel and touch and interact with the L1 by using a DEX that you can use directly in a browser, then you really start to put it all together versus just reading all of this kind of complex, nuanced stuff or interacting with APIs. But from our standpoint, very few of those are investable opportunities today, just because we still see so much opportunity on the infrastructure side. And we still have a fundamental belief that that's where the value is going to be captured and accrued over time.
Yeah, I think that's a very interesting idea. So would you say that's like, again, like bridges, L1s, maybe data availability,
Yeah,
maybe
yeah, for
deepens?
sure. A lot of so L1s very much so kind of app chain specific L1s. So we talked about Injective. Obviously, Pastel is a big investment of ours. They're very focused on really a completely decentralized permanent storage layer that's much more competitive, much more redundant than other alternatives like IPFS or Cascade or IPFS or Arweave. They're also really focused on Web3 availability and infrastructure solutions that take obviously the existing computational resources and enable more LLM focused services. So we can touch on that a little bit as well. But from your standpoint, back to your question, very much focused on app chain primitives as well as certain bridges and scaling solutions. And then more recently as well on some of the AI accessibility and infrastructure accessibility.
Yeah, let's talk a little bit about the AI fusion, like AI Web3, because we've had venture capitalists on here before, and they talk about this, and the listeners might just hear buzzword plus buzzword equals money, and they're like, is there actually a lot of things going on in this space? So what are you kind of seeing from the front lines is in this intersection?
Yeah, I mean, listen, there's obviously a lot that's going on in the space. I can speak to you kind of briefly on what we're doing with Pastel, and why it's so important. So just to kind of take a quick step back, Pastel is similar to a lot of L1s in the sense of you obviously have, validators that obviously validate transactions and whatnot, but it's quite different in the sense of our validators, and we actually call them supernodes, are running extremely extremely high computational powered instances. So you have multiple GPUs, you have terabytes of storage. The entire network is petabytes of storage, right? And we're obviously sacrificing for things like speed, whereas the entire ecosystem is focused on how fast can we transact. There's obviously a speed storage trade-off. Pastel has been focused on how can we have the most highly redundant, computationally powered instances that can really deliver on these certain types of services and use cases. One being obviously decentralized storage, and the other being really focused on obviously AI and LLM services. So these supernodes run something called what we call the inference protocol. And think about inference as really being a suite of powerful and cutting edge LLMs. So effectively, with inference, what we can do is, we have localized LLMs for content generation, for dynamic analysis. Supernodes are able to offer users to deploy AI-powered content verification. We have a tool for NFT authenticity. Sorry, I just paused you really quick there. Kind of froze for the last 1 minute. I didn't know if you were there or not.
Oh yeah, I'm here. So it all records locally. I can always hear your audio for the most part.
Oh, okay. I wasn't sure if you were saying if I can see
Yeah.
it. All right, perfect. All right, good. All right, so maybe we just start from the last 30 seconds. That
Mhm.
works. Do you want me to just start over from inference?
Yeah, let's start over from inference.
All right, perfect. So Pastel Network has really developed what we view as one of the kind of most consumer-oriented AI tools that's really focused on hitting the market. How can we actually commercialize AI in kind of a Web3 setting? And so, if you think about Pastel, it's, as I touched on, it's very unique in the sense of validators on Pastel are running very high compute-oriented instances. I'm talking about validators that run remote GPUs, that run a ton of different storage, terabytes of storage per validator, petabytes of storage across the entire network itself. And so if you think about really what the future of AI is in the world of Web3, how can we offer, whether that's consumers, whether that's other ecosystems like Solana or Injective or whatever it might be, an opportunity to really deliver localized LLMs in a completely decentralized, distributed fashion, right? Because right now, obviously, you have a ton of different options. You have from OpenAI, Anthropic, Grok, or Mistral, whatever it might be, right? You have top LLM models from hundreds of different providers that are out there. Um, the problem is with that, though, is that in what fashion can I really keep the entire ecosystem itself decentralized and tap into those models in a completely distributed manner? So our inference protocol, think about it like this. Validators on Pastel are effectively running API endpoints that enable users to tap into any of those existing models, as well as locally hosted options through an innovated service that we call Swiss Army Llama that was actually developed by one of our developers. And you can think about Swiss Army Llama as really a completely decentralized distributed LLM. And then any ecosystem out there can really deploy or deliver user-friendly web apps that, whether you want a chatbot, whether you want to leverage some sort of training data set, or you want to tokenize training data, you can host that training data directly on Pastel's Cascade, and then you can deploy LLMs directly via via inference on Pastel. So can pause there, answer any questions, but that's something that we're really excited about.
Yeah, let's talk about some of the use cases, because people will be like, okay, we've got AI models, we've got Grok, we've got OpenAI, we've got Claude. Why do we need it to be decentralized, and what is the benefit to these decentralized? Do you really see the use case being largely like dApps that it would be using Pastel, or who do you see using this?
Yeah. So, I mean, there's a few things there, right? First of all, decentralized AI models are critical because in the world of Web3, you're focused on obviously the underlying philosophical kind of thematic approach that anything that you're interacting with is trustless, right? I don't necessarily need to rely on any sort of third-party trust that OpenAI is focused on some certain. They have a bias in the trading model that they're uploading to OpenAI, and they're retraining and training it. And I'm basically having certain, obviously, queries, and I'm getting a certain type of response or whatever it might be. If you want to kind of think about removing that assumption with some sort of AI dApp, then you basically have kind of broken that model completely. Every single part of the value chain in Web3 needs to be decentralized for the entire piece of Web3 to be decentralized. I can't necessarily deliver a dApp on Solana and have that dApp be hosted by a single instance, hosting a single model, and still argue sensibly that the entire ecosystem is decentralized, right? Obviously, AI can personalize user interactions on Web3 platforms. You can do that with intelligent algorithms now. You can adapt user behavior, preferences, needs, whatever it might be in real time. But those AI models need to be hosted somewhere, and they need to be hosted somewhere on a decentralized ecosystem. And that's really where Pastel comes into play.
Yeah, let's talk a little bit about these decentralized AI models and kind of what do you see the future of it being? Do you think people are going to have these on their phones? Do you think they're going to have to go to some website and they can chat with these unbiased LLMs? Or how do you see this playing out?
Mm-hmm. Yep. So the future of decentralized AI models is it's obviously there's so many ways that it could be accessed or unveiled in the future. So first of all, let's just go back and reiterate, right? Decentralized AI is really all about democratizing access to artificial intelligence, right? And enabling a wider range of developers, organizations, whatever it might be, to utilize and contribute to those AI models without the need for expensive infrastructure or centralized control, right? So why is inference, for example, so powerful? Because now all of a sudden you can tap into a network of instances and you can deploy training data, you can retrain models across that ecosystem directly without the need to go out and spend hundreds of thousands or millions of dollars to set up your own instances, to partition your own data, to segment data, to clean data, whatever it is, right? You can do that all locally in a decentralized hosted setting, and then deliver the results and output to a user, whether that's through a web application, right? A user on Solana, for example, would be able to go to the browser directly. All of this infrastructure is completely abstracted away from them, and they're interacting with it the same way they are with ChatGPT, but it's in a completely decentralized backend and infrastructure. And in the future, we won't even be talking about any of these token standards or things like NFTs or any of that. The future of Web3 is the abstraction of all of that, and we'll know that Web3 has truly made it when all of that stuff is no longer being discussed. But users are interacting with those types of dApps and ecosystems.
Yeah, I 100% agree. I always say, like, my mom doesn't know when a website's using MongoDB, and nor will she know, hopefully know in the future if it's using blockchain. It's just like obfuscate the actual the implementation, just deliver a nice UX.
Yeah, I mean,
Okay.
I was going to say, I mean, listen, there's a few kind of key ways too that I think people will really access decentralized AI models. obviously there's, first and foremost, the blockchain platforms. That's what I've been talking about, right? Developers interacting with models through smart contracts. These might govern kind of usage rights, access protocols, transactions, whatever it might be. Then there's obviously going to be a world of like distributed marketplaces. We're already seeing it now. There's emerging marketplaces for AI models where users can buy, sell, rent AI models or data sets entirely. And obviously, these marketplaces use the blockchains to handle transactions, and for a variety of other different kind of use cases and services. Think about Render, for example, and think about what Render is doing on Solana right now. Um, then another thing that we're really focused on too is really kind of the core API and SDK aspect of the market, where developers can now leverage decentralized models using an API directly provided by one of these blockchains or platforms. And then you completely abstract away the complexities of all these interactions. Talked about dApps and obviously how AI models can be integrated directly into dApps. Users could effectively go leverage tools like predictive analytics, automated decision-making systems, whatever it might be. But the last thing that I think is really interesting is kind of token-based access. So access to a specific type of AI model that's been provably trained or retrained, or that has a specific type of partition data set, might require a specific type of token, which could be purchased or earned from contributing back to the ecosystem in some way. Hey, I've granted access to my local GPU so you can actually store data or retrain data here. And you get a token that's granted in return or for usage of the network. Then I can turn around and I have access to the entire distributed network of models and services directly.
Yeah, that's a very interesting future, and I'm looking forward to it. Let's talk a little bit about, you've built, multiple companies and assisted with multiple companies in the AI space and Web3 space. Talk about some of the advice you have for, founders looking to, start, building in Web3. And do you find they have a lot of issues with marketing, like more the product stuff, or fundraising?
Yeah, I mean, listen, obviously there is these things are hard to do. And I think it's very easy to get caught up in the excitement of the market. And it could potentially obviously be a little bit of deterrence just with respect to, wow, so and so project just launched this token and it's immediately 10x, or they have 500,000 Twitter followers and there's 20 million people on their Discord talking about the project and ecosystem. I've invested all this time and money in this and I can't get this community up and running, right? And the way I think about it is there's so many companies that I've seen that, Render is an early investment of ours. And for years, that company, we knew that they were in the trenches, building, pivoting and iterating where it made sense. And obviously hyper focused on the long term thesis, but also open minded and receptive to changes in the market to allow them to pivot in certain ways. And they were never necessarily deterred or discouraged by the fact that it took them longer to go to market. It took them almost twice as long as their initial as their initial timeline predicted to really be able to actually go live on mainnet, to actually release a token, and to actually start to build and cultivate a community. And now they're one of the most successful projects in the ecosystem. So it's funny how these things kind of pan out. And if I was a founder and we're giving advice to a founder in that regard, I think the most important thing is to obviously be patient with respect to achieving the long term objective that you've set out on. Obviously, be smart in terms of raising capital. Um, Obviously, you want to be judicious and prudent in that regard. And I personally think companies that I've seen most success in, they haven't necessarily played the entire game of marketing or community hype or community promotion and whatnot. They've been much more focused on putting capital into research, development, and technological prowess, and they've built a competitively differentiated technological company that they've then found that really kind of one critical go-to-market use case, that one key commercial application or enterprise application that they've then double, triple, quadruple down on. And then you start to go out and really look for different use cases, different go-to-market strategies. And then you really start to go cultivate your community and then build and grow from there.
Do you think that's an advantage of the infrastructure plays that they don't necessarily, like, you'll see a lot of, companies in the space kind of live and die by building a community, but the infrastructure plays, like, they're selling largely B2B, which is, I think, a slightly better position to be in.
So from an investor standpoint, I personally obviously think it's, a massive advantage. That's why we're focused on it. Obviously, it cuts both ways. When you sell into enterprise, it might take a significant amount more time to actually land that customer. You're investing a lot more money into acquisition, you're investing a lot more money into integration, and really a lot more money into managing that customer post-sale, right? Constantly upselling them and whatnot. But once you land that customer, it becomes extremely sticky, and you have strong financial visibility, strong recurring revenue, and really the ability to go and continue to capture and upsell. And it becomes an amazing use case and case study to go land the next 2, 3, 4 of those guys. On the flip side, it's much more easier to go build an initial community base and consumer-oriented overall customer segment, right? But easy come, easy go, right? If I can go get 1,000 customers overnight, they're likely to just be able to churn out just as fast. So if you don't necessarily have a platform with a significant entrenched advantage where switching costs of onboarding are just as small as they are to offboard, to me, that's somewhat dangerous. Obviously, we saw with NFT marketplaces, right? Look at OpenSea. OpenSea was, the number one NFT marketplace, and for a while, we never thought that there would be any kind of demise. And now they're having a hard time getting people just to log into their platform. Obviously, there's more of kind of a fickle market segment there, just with regards to secular trends around NFTs overall. But I think obviously one of their kind of issues too is they got very content. They were very, very slow to even consider onboarding ordinals. I don't even know if they have yet. And that's been a huge part of the growing segment of NFTs over the last year and a half or so. So I think if you are going after the consumer landscape, you really need to carefully listen to the audience and customer and continuously iterate and deliver new features and services to enrich the experience and keep customers onboarded.
Yeah, you brought up an interesting point. I'll probably have to do a case study on this in the future about the Blur takeover and how they approached, essentially attacking OpenSea with their points program and generating a lot more user hype. Very interesting stuff. So let's talk a little bit about, Pastel Network and, Innovating Capital, and where people can kind of get in touch with you. Let's say they're looking for investment or they're looking to build on Pastel. Where can they get involved with these two projects and kind of keep in touch with you?
Yeah, definitely. So you can follow me on Twitter, PAnthonyLG. Obviously, Innovating Capital. You can follow us at Innovating Cap, and that's also innovating.capital is our website. And then from there, we obviously host and post about all of our existing portfolio companies and a variety of news and updates and releases on each of them. In terms of Pastel, you can find us directly on Twitter at Pastel Network, and then that'll obviously give you all the social links to Discord and wherever you might want to go.
Awesome. Thank you so much. Well, to all the builders out there and people looking for fundraising, Anthony, he might be your guy. So I'll put all the links in the description. And to everyone, let's continue to build Web3.